comparing it, this is what I will get from my preferred shares, this is what I'm currently getting, and then without volatility compared to the DD Reit. Some of them, as they start looking and their preferred shares were bought way before, are getting a higher yield. If I buy it at the IPO price and assuming ito yung magiging dividend yield niya, kung makukuha ko dito 5%, is that something that's okay for you already? Investing in REITs does not mean na saluhin mo kagad siya during the IPO. If it's giving what you want, keep on holding on to it. If it fits your parameters, add more to it. Because at the end of the day, REITs will always be a dividend play. Over the past few days, I got so many questions about the Ddmp Reit IPO, and I want to share my thoughts on that from a perspective of someone who has been investing in REITs for quite some time and someone who loves dividend investing. So for me, it will boil down to a couple of things. Number one, you have to be very, very clear on your intent on why you are buying the Ddmp Reit. Meaning, are you in it for short-term movement? After the listing, do you have a battle plan on what you're supposed to do? That if it lists and it goes down, are you selling? Are you cutting losses? Or if it goes up until what point are you taking profit? So I don't know how it will be in terms of its short-term movement. I do not have an idea. What I do know is a lot of people are asking, will it be similar to how Double Dragon was or how Meridian will be? That's something I don't know. But what I do know is it's relatively bigger. Inherent advantage in terms of moving faster for Meridian and Double Dragon is that it was a smaller listing. There were just fewer shares moving around, smaller monetary equivalents moving around, and that made it in a way lighter for it to be able to move and gave it a bit more volatility. This, on the other hand, is relatively bigger. So if you are that type of person, you better create your scenarios already on what are you supposed to do should it move up. Will you start adding more? Or will you just hold on to your position and then take profits at a later point? Out of the 14 billion that will be raised, 70% will be owned by institutions, foreign institutions, then the remaining 30% will be locals. If there's one thing that I do know about institutions is they're there mostly not to trade on a very, very short time frame. They're there to invest, and mostly they will be there to get dividends. I'm gonna give you my take on dividends also in a bit, but when you compare dividends in the Philippines as compared to other countries, I think our dividend yields are higher, especially for those of you guys who have been tracking US markets. Mapapansin nyo, a lot of the stocks there, even the large cap stocks, the big brands that you already know that have been giving consistent dividends on a yearly basis, they don't get the same kind of yields that we are having here in the Philippines. In my opinion, that's 70% of foreign funds. I think most of the time they're just gonna hold on to that position and just collect the dividends. You won't really see a lot of short-term movements from them. Kung meron man gagalaw, it will be, in my opinion, local retailers who form a portion of that 30%. That's it for those who want to at least analyze it from a short-term perspective. Next, for those who want to position in it because they want to look for long-term capital growth, it may follow the progression of a REIT. Since a REIT, we've seen the stock start to also push up since the time that it listed. My narrative and my goal when I enter REITs is I just really want to get dividends. That's been my whole ball game ever since. I just really wanted to get the cash flow from it. Just to give you context on it, I just really like to get the dividends, and my intent is if it appreciates in value in the future, bonus na lang yun. I think questions that you need to ask yourself is basically this: the dividends that they will give, is it something that is attractive already to you? Term attractive also from a cash flow and / percentage perspective would be different for all of us. Some may have set it higher, that this is your benchmark that you want to get. A lot of people also who are investing in preferred shares may compare the yield that they would get from DD Reit, comparing it, this is what I will get from my preferred shares, this is what I'm currently getting, and then without volatility compared to the DD Reit. Some of them, as they start looking and their preferred shares were bought way before, are getting a higher yield. If you place a higher preference on yield and then hindi ganun ka-attractive sa inyo yung yield na lalabas, by all means, you might be better off positioned elsewhere. And please remember, I created videos on other companies in the Philippine Stock Exchange also that has given out higher dividend yields. Just looking at SPC pa lang, the yields that you would get from SPC have been generally higher. The returns that you would get from a stock on a dividend perspective is highly also dependent on what price you buy it. For those who would like to buy a stock and earn from it from dividends, you also have have to be sensitive. If I buy it at this price, if I buy it at the IPO price and assuming ito yung magiging dividend yield niya, kung makukuha ko dito 5%, is that something that's okay for you already? Or are you willing to wait that later on, baka naman mag-correct yan, and if it starts to correct, the price would go down, and if I buy it there, my dividend yield would also be higher. Investing in REITs does not mean na saluhin mo kagad siya during the IPO. It could be if the dividend yield at that percentage is already attractive for all of you. And I've read several reports that it would be around the 5% mark. If the 5% mark is okay, I'll try to do a deep dive more on the financials of that. But if the 5% mark is already okay for you, then by all means, you can go with it. But if you want more, then you run the risk also that, okay, I will wait for it before it goes to the market. Pag punta sa market, pag bumagsak, that's when I buy, so I get a higher yield. Pero you run the risk of what if it goes higher. I do hope you spend the time also to research and get to know it. Look at how sustainable the income is and how predictable it is, and that will be highly dependent on the tenant mix that they have. That will be highly dependent on how long those leases are locked in. The more locked in those leases are, the better it would be for the company, and the easier for you also to somehow project, no, okay, they have 5 years, 6 years, 7-year leases average na nakalock in. That means next year, 2 years from now, I can still somehow predict that the company will still get this revenue, and if they're getting this revenue, 90+% of earnings can be given out as dividends, then somehow you can also project stability on what you could possibly receive. And above and beyond that, it's very, very important that the tenants, how much of the entire building space has been rented out, because the fuller they are, the better it will be for you, that it's easier for you to predict it, especially right now that we are still in the midst of the pandemic, especially also that there are certain sectors in the economy that are relatively hit from an office space perspective. And please do note that Ddmp has commercial spaces attached to their buildings, but it also has a office space connected to the buildings as well. So businesses, offices are all about, similar to the stock market, supply and demand. If there's an oversupply, it will be harder for buildings to be able to raise rent, or also magkakaroon ng bakante. As it hits the revenue, din matatamaan din yung dividends na makukuha nyo. So those are two things that I want you guys to study, not just now, no, but something for REITs that would come out in the future. As you start buying REITs, just keep on analyzing their disclosures on gaano ka-secure yung tenant mix nila. One of the biggest advantages of REITs is if you are satisfied with the dividend yield, then you have an opportunity that at any point while it's out in the market already, you can buy and you can add more. So that's one additional item that you can look into it. Or the advantage of its liquidity also, if you are not satisfied anymore with the yield, then you can also take profits, you can transfer to another stock that will give you dividends. And head to head also, comparing this with a traditional property versus REITs, I like REITs because it democratizes things. Meaning, kung pinapanood nyo to tapos hindi naman ganun pakalaki yung capital ninyo, investing in REITs gives you exposure for you to be able to have an investment in the real estate office market with a very, very small amount of money. And kung may kaibigan kayo last year na may condo, tapos dahil sa pandemic, nahirapan sila magpa-rent, it was harder for them to get tenants, and it's harder also for them to be able to liquidate it. Sa REITs, pag gusto mong ibenta, you can sell it anytime. So it's harder though to foresee now how the prices will go on a day-to-day basis. It's harder to project how the prices will go on a yearly basis, but it's easier to look at it that way. You always treat it as paper asset that if it's giving what you want, keep on holding on to it. If it fits your parameters, add more to it. If you don't like it anymore and there's a better storyline, there's a better asset that will give you what you need, then it's okay also to transfer it. For me, it will always boil down to what the dividends are, and the dividends will always be related to what they're earning, and the earnings will always be related to who's renting. So rentals, earnings, dividends. When this pandemic is over a period of time, property prices always go up. As property prices go up, rental rates also follow. I don't know how it will be in the office market this year and also next year, but if you stretch it out over a long period of time, history has shown us that property prices and rental rates for offices over a stretched period of time would normally go up. So it could be also a play for you that, okay, it may not look good in 2021. It may not have been as attractive from an office building perspective in 2020. Pero baka sa 2024, 2025, when things get better, rates would go higher. And I positioned earlier, and as you positioned earlier, nagtataas din sila ng rental rates, you get to also earn more. Separate your trading portfolio for specific stocks that are more volatile, and I highly suggest this for people who are in it for dividends. Because at the end of the day, REITs will always be a dividend play. I hope you guys got a lot from this, and I just want to share this. While I'm making this video, we saw US markets massively drop. We saw Philippine stocks also massively drop. What's nice about earning from dividends is you get a stable cash flow, meaning at the height of the lockdowns last year, at the height of the pandemic also, at that point, I did not know how the market will recover. But I knew I had stocks that gave me dividends, both from my preferred shares and also from my common shares that I knew that their income wasn't as affected as much. I got my cash flow. To those of you, your main intent also in the market is you've already grown your base, but you just want to get cash flow from your base already, then go for dividends, go for REITs. And I think yung pinaka-difference nun, is that you need to separate money that will give you growth, but in the same way, you need to separate money that will give you cash flow, your rental income. Kumbaga sa condo, this is our rental income na nagpapaupa tayo, na may nakukuha tayo on a regular basis. As you get older, is something that will protect you, is something, in my opinion, will help you, because hindi naman natin alam gusto natin pag 60, 70, 80 tayo, on a regular basis may nakukuha tayo na pera. And I think our REITs is a good way also for you to do it. But again, don't take my word for it. Please, after this, continually study. I have so many videos about REITs and the pros and cons of REITs as well. The only reason you buy Ddmp is that you're fully convinced and you know what you're getting into, not because you heard it from a friend, not because you heard it off of YouTube, not because you think na uso mag-invest ngayon, mag-invest na tayo online, may bagong listing. Don't do it that way. It should always be about gaano kadami alam mo, gaano ka convinced dun sa pinapasok mo, and nilalagay mo lang yung pera na tanggap mo na if it does not go your way, kung bumagsak man siya, willing ka mag-cut loss na makatulog ka ng maayos, or willing ka na pag bumagsak siya, you wait in the red without selling also, and it doesn't bother you. Because I'll say this over and over, it will always be about the amount of conviction that you deploy. It will always be about the amount of conviction that you are ready to put in the market. I hope you guys got a lot from this, and I hope that this is something that was insightful. But in the description below, I'm going to put a couple of things. All of our online courses, we have a Zoom technical analysis course by May. We have a live training session also, a fundamental analysis naman this April. Then for those of you who want to invest in US markets, the links are down below. Those who want to grab copies of my book, links are down below. We have it available via Shopee as well. God bless, guys. I hope that this video is something that gives you a bit of clarity on my thoughts in it. As long as the dividends are there, okay na sa akin yun. As long as the dividends are acceptable to me, okay na sa akin yun. As long as the dividend is also attractive as compared to what I currently have, okay na sa akin yun. And as long as that's sustained, okay na rin sa akin yun. It will always go back to what's personal to you, and what I can share is what's personal to me as well. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.